What is up, guys? You may or may not have seen me before. I am Reality, and today I'm bringing y'all a market overview and forecasts, just in general for a couple markets here. So let's just get straight into it. I'm not even going to waste time saying anything else. So here we have the Nasdaq futures chart, and the question, right? The question is whether we're going to continue going higher for this week, or if we're going to have a more significant pullback. And looking at the weekly chart, sorry, I have some drawings here I need to get. Sorry, I was working on something else here. Right. And what is this? Oh, yeah. Anyways, in my opinion, based on time here, because time is the most important thing in a marketplace, based on time here, it is very likely, highly likely, that this week will be like the actual first week we're going to see a significant pullback for Nasdaq. I don't believe we're going to continue higher here. What would we pull back to? Well, we would pull back to this inefficiency there, that daily inefficiency, and possibly also wick into this weekly inefficiency here. We can wick into that. Most likely we won't see any bodies there. It's also possible we don't even trade there, but I'm just having that as a possible scenario. Of course, the market could just keep going higher. That's, you know, that's like the most basic view you could have when you're in all-time highs. I'm fixing my drawings here because I have a specific way of showing things. This represents to me that it's in a weekly time frame. I was gonna say, yeah, oh yeah, it could keep going higher. But personally here, I'd be... Okay, so ever since down here, I was like, yeah, we're gonna rip to all-time highs. And then up here, I was like, okay, we might slow down a bit, but overall, I'm still gonna be looking for higher. And I've been looking for higher this whole time. And now this week is like the first time I'm actually not looking much for higher anymore. I'm more so looking for lower. If we do end up going lower, I think a possible scenario would be that Monday we consolidate here. Tuesday we come up, create the high, and then that's the high of the week on Tuesday. It's possible Wednesday also does it, but Tuesday is most high probability in my opinion for this week. And then from there, Wednesday, Thursday we expand lower for the week. And then Friday we might go back to the near the midpoint of the weekly range. So yeah, there's that. Now, what I'm going to talk about is future predictions. This is like, you know, this is where it gets, I guess, kind of speculative. But whatever. I'm just gonna voice what I see or think here. Anyways, I do think we are going to have a crash, a big bubble crash. You know how everybody's talking about bubble pop? I think that will happen, but it won't happen this year. It will not happen this year, okay? Originally, I was looking, you know, just based on time alone, just simply just on time alone, not price, just focus on time. 2028 should be the year most highly probable where we see the stock market go down. Now, that doesn't technically mean a crash, but I think it's most likely probable that it will be a crash, similar to the 2000 crash, or whatever you call it, the 2000 bubble, the dot-com bubble, or you could even compare it to the 2008 market downturn. So based on time, 2028 is the most likely year that's going to happen. Now, I had a hunch that possibly we actually might see it happen on 2027. Coming into 2027, you might see some signs of it December 2026, but then 2027 would be where the actual high and displacement lower would occur, continuing into 2028. But I'm gonna voice what I think might change that. Overall, I don't think it's gonna happen this year. It won't happen this year. But it can happen 2027 or 2028, and I'm gonna tell you what I think could make it occur on either 2027 or 2028. So I believe that in June or July, we're going to see a fast flash crash in the market. I think closer to the July more than June, similar to what we had back here in 2025 and even the 2020 COVID crash here. And so I think something like that is going to happen June or July this year. And if it does happen, this is what I think comes after. If we do get a fast flash crash in June and July, maybe one of those 2 months, I believe that it's more likely we're going to see a very, very, very large rally in this market past or at 33,000. We may even get to 41,000. 41K and maybe even more, maybe 47K, right? And I know that seems crazy right now, but I'm just telling y'all what I'm seeing, right? Or what I'm thinking. Anyways, if we do end up having that crash in June or July, then in my opinion, we're not gonna have the bubble pop similar to the 2000 or 2008 downturn in 2027. I believe it's most likely going to happen in 2028, just as my original perspective was, just by looking at time. If we don't get a crash in June or July, then it's possible we might have it in 2027. Right? Those are the conditions that I am seeing right now. What would cause the crash in June or July? That could be a couple things. It could be virus outbreak, hantavirus, the hentai virus. It could be, what else could it be? I had a list of things that it could be. Oh, it could be something related with a jobs report being released that sounds like very negative. Could be something like that. Could be something with AI. Something along those lines. And so yeah, I believe that would happen. And so to me, it would make a lot of sense for it to happen if you're thinking like a market maker and a smart money entity, because everybody's waiting for May 15th, right? Everybody's waiting for the new Fed chair. They're like, oh, it's going to be bullish, right? But look at where the market is at. The market is at, it's in a premium. I mean, come on, it's in a premium. It only has so much left for it to continue here, especially when it's time right now for it to retrace. So I think May 15th, that's this week on Friday, it's likely we're going to see the market actually create the high this week and then turn down lower. And then after that, it can continue higher. But then the Black Swan event happens June or July, and we see the market flash crash, and then everybody gets scared and turns bearish. And then that's when the Fed intervenes or whatever and starts money printing. QE starts, quantitative easing, maybe disguised. Fed cuts rates. Anyways, something like that. And then we see the large rally afterwards. because everybody believes that the AI bubble pop is going to occur this year. So people are gonna. Let me get my tool out here. Yo, I like that. Let's see. So everybody's gonna expect something like this, right? Because of the new Fed chair. But then we're gonna see the opposite of that. We're gonna see the opposite of that, and people are gonna be like, "Huh, that's weird." And then we see the flash crash happen, and they're like, "Oh no, this is very bearish. This is the 2026 AI bubble pop." But then it's not. It's a retail trap. It's a bear trap. And then we actually see a very huge expansion afterwards, all the way to what did I say, 33K, past 33K, and possibly even 47K. I'm not paying attention to the time, by the way. I'm just marking out. And then I don't know whatever happens here until 2028, and then we finally get the big bubble pop. Yeah, that's what I'm seeing. If we don't get that crash here, then I would look for the bubble pop in 2027. Yeah, I think that's all I had to say for this market. So now let's go on and look to Bitcoin. So here we have Bitcoin. Also, I don't have any drawings. I don't have like any drawings. Usually I would, but it's more important for me to get this out there right now. So I didn't really have time to put on the drawings here. I can draw them though. Anyways, here we have Bitcoin. I'm more inclined to believe we have bottomed here, and I don't believe we're gonna come down and break below these lows. I just don't think that's gonna happen. I think a lot of people are waiting for it to happen and expecting it to happen, and they're looking for a bottom to form between like July or August, and it could be that there is a bottom created at that time, but it won't be, in my opinion, below that low. It could do it above. I should favor this tool. Like, we may get a bottom July or August, but like we could come up here first, take out that high, everybody turns bullish, then we get the flash crash in June or July, and if it happens in July, then that's in between July and August, right? So you get the bottom here, and then you see the market continue until all-time highs. And so yeah, people could be correct in the bottom forming that way, but I don't think it's going to happen here. So yeah, I am looking for this high to be taken. Like that's where my eye is focused at. I'm not looking for this market to, or anticipating it to go to these lows. I don't really see that occurring. And if we go down to the daily chart, usually the way I would view this here, right? This looks like a trend line kind of, and I like to use trend lines as a retail trap and target it, and I like to like go against it, just like over here. For example, over here, this was a very clear and beautiful trend line to absolutely rip through it and destroy retail here, right? Retail traders. But obviously it depends on the context, right? So this, usually I would want to see this rip through, but in this context here, this isn't actually a trend line I would attack. It's not even a trend line in my opinion. This to me here is actually accumulation. All of this here was accumulation, but now the market is going to rip higher here, and since it's going to rip higher, they're not permitting price to basically go at a more discount because it's just very wanted. It's going to keep hiring, it's going to keep offering higher and higher, but all of this smart money is accumulating in. and once it reaches a certain threshold, it'll run up. Obviously, the first target you would want to see it reach would be this high, and then this high, and then from there it can continue up to this high. But yeah, I'm viewing all of this as accumulation, and usually when you see something like this, when you see it accumulating upward, you do have a very large expansion that comes afterwards. Of course, it is possible that we may kind of like break through the trend line a little bit, but usually I would target it fully. Like I would expect it to go at least here or fully break through it. But it is possible that we want to get to like here, and then from there we have the expansion higher. And then once we get up here, obviously everybody's going to flip bullish, and then that's when we can rug pull the market June or July with a fast flash crash. And where would it drop to? I believe the monthly wick here, it's going to drop to here if we get that flash crash. So we will get the flash crash, and then we trade down into a discount. So if you imagine this like this, and then it expands higher, boom, and then we get a flash crash. A flash crash here, boom, and then that would be a buying discount opportunity, and then blast off, right? This is how it may look like, and this obviously can wick a bit further down and take out that low right there for a bit more liquidity. And yeah, and obviously this is also like a very good bear trap here, a retail trap, dumb money trap. Why? Because if you go on the monthly chart here, right, it would look like a head and shoulders pattern for retail to fall victim of. They would see this go down, and it's like, oh, it's a head and shoulders. We're gonna go down all the way to 40K now. But no, it's gonna be a big trap, and smart money is gonna buy down here after the flash crash, and then retail will be cannibalized once it rips higher. The real head and shoulders would be this one. This would be the true head and shoulders. Obviously, I'm not making my assumption based on the pattern of the head and shoulders. I'm just pointing it out from a retail view, how they would view it. So it's like, you know, it's like for retail concept, it's like, which one is the true one? Is it this one or is it this one? I'm telling you which one it is going to be the true one. But it's not based on the pattern itself. It's based on how the market actually works, which is through the algorithm, because it's manipulated, controlled 100%. Also, I want to add something else here. I've not really talked about this. I've not shown anybody much of this, but I've kind of been working on this, I guess, project, and it's where an ICT concept, right? We have the daily range, and we have kill zones, right? We have London session, we have, well, at least for stock market indices, futures, right? We have London session, we have pre-market, we have opening bell New York session, or the AM session. Then we have the PM session. Oh, and we have the we have the New York lunch macro before the PM session, and then we also have Asian session. I believe that Bitcoin has those similar kill zones in its daily range, right? Of course, but I also believe that it has it on a larger time frame. And so you can see these dividers here. I've divided, I put these dividers apart, each by 60 days. And so each 60 days, in my opinion, is I'm viewing that as one full daily range. And you can see the names here: Tuesday, Wednesday. So for example here, this would be the Monday trading. This would be Tuesday. This would be Wednesday. This would be Thursday, Friday, and then now we're on Saturday. And then we would continue until Sunday. And why is this important? Well, if you look at the names, it says reptilian. Look, guys, if you think about what Bitcoin is, what really is Bitcoin? I really think Bitcoin is one big lie. And let me get rid of this so it doesn't clutter the screen. I believe Bitcoin is going to go to 0 one day. That's it. It's going to go to 0 one day. I just think it's going to go to 0 one day. Okay. If you were smart money and you created this in 2009, 2008, whatever, this is a very long-term asset. And since it's such a long-term asset and it's one of the most manipulated assets, I think crypto is one of the most manipulated assets out there. I mean, you can see from this here, the October 10th crash. I mean, you've never ever seen that like anywhere else. Of course, you saw it in the stock market, Nasdaq, right? You saw it here, but look what happened afterwards. It didn't really affect it much. It affected Bitcoin a lot. Like that was done for it. You know, like that's it. Like look what came afterwards. I was gonna say, I believe the manipulation you see here is comparable to the manipulation that happens in Forex or futures trading when you have a news report at 8:30. That's basically how I'm viewing this. I'm like scaling up what you would see on a daily range. And so here, smart money manipulated on the daily time frame Bitcoin here, which is why I'm scaling this up to a range of 60 days for like a daily range, a reptilian daily range, because I believe that smart money is manipulating this from that point of view. Because if they have everything planned out, they know when they're going to get rid of this. They know when they're going to rug pull it to 0. They know that. And so obviously they need a plan of how they're going to manipulate and move this asset throughout a very large period of time. And so that would be by using cycles of 60 days as one daily range. I hope that makes sense. I hope I explained that well. For example, here you see the red box. This would be London session in my eye. The green box is pre-market. Blue box is AM session. You know, opening bell. The purple box would be the London lunch macro. Orange box is PM session, and then the yellow box is the Asian session. And so what we're coming up into is the Asian session, and this Asian session is going to be very important for Bitcoin because it will really dictate where Bitcoin is going. I believe May is a very important month because May will tell us if we really are going to continue higher and we have bottomed here, which I think is likely, but May will really confirm to us what's gonna, you know, it'll really confirm because May, it's just a crucial point. This is just a crucial point because it coincides. May is coinciding with this daily range, this 60-day range closing. And what else? Oh yeah, that's really it. May is just an important time. I forgot what else I was gonna say. Oh yeah, on the weekly chart, I want to point something else out here. There's a lot of things I like want to point out and I want to say, but I don't want to make this video too long. And also, I feel like I've forgotten a bit of what I was gonna say because there's just so much I could say. Anyways, I'm gonna mark out this bearish weekly breaker here. This is an important point here. we're at the mean thresholds at this bearish breaker right here, and you can see we close right at the midpoint. But we're also at this weekly fair value gap right there, and so this point is really important. If we don't displace lower from it, breaking below this low, in my opinion, then we're gonna rip higher, because this should be a very strong point. Like if you're a bear here, you would want to see this displace super quick, aggressively, and easily here, and that would give you confirmation that we're gonna head down here. And apart from that, we are also at the midpoint or consequent encroachment of this weekly inversion monthly fair value gap. You can see that right there. So we're right at the most important point of this whole range here. We have a lot of algorithmic points confluencing in there at a very important time, which is May, and also the Asian session of the 60-day range. And so we're at a very important day, very important points there, both on the time axis and also on the price axis. So far, we have not seen much movement downwards, and so I am still inclined to believe that we are going to rip higher here, because it just doesn't seem very convincing to me that this is going to head lower. And so as long as we're in this area here, we're going to chop a bit higher. Probably once we're above all three midpoints here, that's when we can start seeing it speed up to the upside. But so far we're below that, all three of them. So we have to wait until we get through them, and then close, and then possibly have one more candle come back down, trade to them, and then from there we can accelerate upwards. Also because of the time. Again, it's all about time. It's the time right now where we're going to see a decision. Let's just say it that way. So this week is a decision week. And yeah, that's what I had to say for Bitcoin. What else? Oh yeah, we're at. I mentioned hantavirus, the hentai virus. Here we have vaccine stocks. I think it's possible that these are gonna perform really well if we do get more stuff about the hantavirus. Now I'm gonna say, to be honest, I don't want anything about that to happen. Like I don't want a repeat of 2020. To be honest, I don't want that. I don't want that to happen. But if I'm being honest, if we truly have no control over what they do to us and what they plan, because we all know the last pandemic wasn't a pandemic, it was a plandemic. They planned it. If we really have no control over that, then it's most likely going to occur again. And if it does occur, when will it occur? I believe it will occur. You're going to see it more in July going to August. And so that would be the time you would be really watching for that type of stuff. And so July or August, that's when you should start seeing these stocks or other vaccine stocks, or similar med biotech, whatever they call it, starts aggressively repricing higher. You can see what happened in 2020 here. We had a very large expansion. We had a 2,536% increase there for the Moderna stock, and then we have Novavax, I think this one is called here. In 2020 we had a 5,700% increase. So I think it's very likely we're gonna see that repeat. All of this I would be obviously viewing as accumulation. We've already had a large displacement here, breaking above short-term high right there, so that would be a market structure shift. Then we come down into a discount. Smart money starts accumulating for the next pandemic, and then we see a large rally happen, starting or being kickstarted in July, August of this year, and continuing into next year, giving us a nice rally here. in both of these stocks and the other stocks as well. And so yeah, if you guys think, or if you guys, well, obviously do your own research. I'm not here to tell you to buy, sell, or do anything. I'm just telling you my view. I think it'd be smart to look to paper trade. Let's just say to invest a paper trade here. And in case we do end up seeing a repeat of 2020, of course, I would prefer not to see that occur. But if we're talking about probabilities and statistics, I think statistically speaking and probabilities, I think it's gonna happen. Like, you know, I don't make the rules, okay? I'm just telling you what I'm seeing and what's likely to happen, and I don't think we have really much control of that. And since if we really don't have much control of that, at the very least we can do is take advantage of it and at least make a profit, right? Because like everything's gonna get more expensive anyway. So if we truly don't have control over that, then let's take control of what we do have, and is investing and possibly making a return on what they're gonna do, and that way we're not really left behind and being able to afford groceries or and gasoline price, right? So yeah, that's just my opinion there. I'm throwing my 2 cents in there. But yeah, that's all I had to say. Let me go back to NASDAQ so I can give y'all where I think we could crash to if we do get that crash in June or July. Let's see. Probably this area here, I would say. So like where my arrow is right there, I would say like around here. Actually, okay, well if it happens in June, like, well I said it could happen most likely in July, so by that time it would probably be way higher, right? So if we're up here, then yeah, it would make sense to bring it down here because this would induce the most fear, I feel like. Maybe we could even go deeper on something like that, and then really see a large rally afterwards. Yeah, I think that would make sense. I don't know. We're gonna. It's got to be fast. Like it's got to induce fear, enough fear. Obviously, I would look to see if we create a low here. I want to see a nice swing low be created sometime before the crash. That you can see from like the weekly chart, because that gives the opportunity for sell side to build below it, and that way they can decide to run that later. And yeah, that's how I would read that. What else? Oh, one last thing for Bitcoin. Everybody's expecting this or viewing this as a bear market. I don't believe that's what it is. Everybody's looking for the next 70% drop. I don't think they're gonna give it to y'all, to be honest. I'm just saying, because that's what everybody's looking for. That I don't think that's what's happening. And I don't even consider this a bear market. You could see it as a shallow bear market, I guess, right? Total, we've dropped 52%. I honestly don't think we've even entered the real bear market, to be honest. Like, I don't think we've even began the bull market yet. I know that sounds crazy. It may sound crazy. I understand that. I know it does. But that's why I'm saying it. Is because for retail, that sounds like crazy. But that's the point I'm trying to get to, is that I don't think this is gonna behave like y'all think it's gonna behave anymore. It's not the same. I don't believe it's the same. Smart money's really got this thing strangled, you know? It's really controlled. It's been evidenced by last year. Or not last year, but the last cycle. Because let me explain. Let me explain a little bit what I see here. And Bitcoin, you know what, let me go on a weekly chart. 2021 was the first ever year 2021 and 2022 is the first ever year where you saw in a bull market see an actual market structure that makes sense from a smart money perspective. What do I mean by that? We had a high get created. We had a market, we had the market get brought down a lot. You see a bunch of relatively good lows get created, so there's going to be a lot of sell side resting below that, right? Then you see them take it back up again, and obviously there's going to be people with buy stops up here. And so from a smart money view, there's going to be a bunch of liquidity up here to which they can sell to, either as exit liquidity to take their profits from whenever they bought down here and all throughout here, or they could also use it for shorting through the bear market. This is the first time we've ever seen something that I would refer to as institutional price action. All the times before it, this is not, in my opinion, really institutional price action. None of this is institutional price action, in my opinion. This is all like retail, crowd-driven, blow-off top moves where really rallies hard and then it just falls, like it just disappears, it just fizzles out aggressively. Like, do you see what I mean? Like this was different. This is different here. This is like where everything changed, in my opinion, for Bitcoin. And this was also, I'm pretty sure, around the time the futures came out for Bitcoin. And obviously, futures coming out for Bitcoin is probably problematic because it's obviously going to be more manipulated through futures. Like, come on, you guys can agree and use your eyes and see that this was different here, okay? Here you have a huge point here, boom. You have a point here, boom. Point here, boom. Point here, boom. Point here, boom. Huh? It's rounded? Oh, that's strange. It runs higher? Oh, that's strange. Boom. How about over here? Where's the point here? You had a rounded top here, down. I ran it. Okay, boom. So like now, everybody thinks this is gonna rip lower now, just like every other time? No, I just don't see it that way. So yeah, that's what I had to say for Bitcoin there, and I think it's a completely different asset now, or maybe it never was. Maybe they, this was their plan all along, right? Because they're reptilians and they live for centuries, right? They've been alive for centuries, like millennia. And so they tricked everybody to fall for their trap once again. So yeah, the way Bitcoin behaves now is more institutionally and smart money aligns, and not really aligns to how retail views it. And so, what does that basically mean? I'm basically saying that smart money are going to be the ones profiting the most now here. And it's done for retail. There's no more profits for retail here. It's going to be harder, in my opinion, for retail to find free money, let's just say. So yeah, golden era is over for them. Just as it always happens. That's just how it is. Smart money always takes over. That's just how it is. But anyways, I think that's enough of a video. That's most of what I had to say, and yeah, I hope you guys have a good day. I don't know when you're going to watch this, but have a good morning, good rest of your day, good rest of your night, whatever. And you may or may not see me again. May or may not see me later. Bye bye.